Hello, everyone. Welcome to Peabolic Notes. My name is Michael Kirkchin, and today is Monday, August 22nd, 2022. This is my first video in a while. It's been a couple of weeks I haven't done a video, so looking forward to get started and share with you what I'm looking at in this cryptocurrency space. Before I get started with the charts, just a quick reminder, this is not financial advice. I'm not a financial advisor, and I'm just sharing with you what I'm doing as far as trading in this cryptocurrency space. I'm a long-term holder. I'm not a trader, but let's say on a daily basis and so forth. So I'm looking to basically look at the space, try and see when it's a good time to acquire more positions and kind of be buying for the future. So if you're a long-term investor and do technical analysis, welcome aboard. If you're looking for day-to-day trading and so forth, this is not the place. There's a lot of other great YouTubers who do videos and stuff in the space. So those would be better guys to follow. So let's get started by me sharing with you my computer screen so you can see exactly what I'm looking at right away. So as far as what's going on with really the market, the way I'm seeing it right now is that what is going on right now with the liquidity and stuff and the ISM and so forth. So the reason why I like looking at the ISM is like I learned this one from Raoul Paul, and he looks at the ISM quite a bit. And really when we see these ISM kind of manufacturing numbers, which is really the manufacturing PMI that the US releases every, I guess pretty much every month. When we see these numbers going lower, it kind of indicates that the economy is kind of going a bit, let's say, in a negative direction. So basically, we see this very clearly that since, let's say, after the COVID issue that we had, the whole world economy and so forth, really we had this nice, it obviously dropped quite a bit. Anything that goes below the 50 mark is very negative and very bad for recession. Anything above the 50 mark is it's kind of more positive for the economy. Now we see that we're kind of going negative. And as far as what's going on with these numbers, it is kind of, if you look at the year to date, let's say the last, for example, 12 months, we see that it's kind of been going downwards, let's say, since October. So I'm paying attention to this. Also, I'm looking at what, of course, the Fed is doing in the US. The Fed really is the biggest central bank in the world. Every single other central banker are following the Fed, and whatever the Fed does, all the other banks, like for example Canada, where I'm based at, is going to be following as well. So we see that basically the Fed funds rate right now is at 2.5%. It's gone up quite a bit in recent months, obviously, since we know that the Fed had been tightening and so forth. At the same time, what's going on with their balance sheet? The balance sheet also is kind of has been going down, right? So basically, we see that the Fed balance sheet was something in the range of around $4 trillion as of 2019. Then all of a sudden we had COVID, so it went from 4 trillion and all the way up to 7 trillion. All this liquidity that came into the space. Obviously, this was very good for risk-on assets like Bitcoin, Nasdaq, and so forth. And now we see in recent months, if you look at this thing, the last 6 months, all of a sudden we see that the liquidity is going downwards, right? At a certain point in March of this year, it was almost at $9 trillion. Now it's kind of going up and down, but really at the end of it, it's kind of coming negative, not positive. So this is not great for risk on assets. And what does that mean really for us, really, as far as risk on assets? Well, myself, I'm looking at two things really very closely. The first one, of course, is going to be what's going on right now with the US dollar. The US dollar, I mean, I forgot where I heard this, where someone said that the US dollar is a wrecking ball when it goes up, and it is a wrecking ball when it goes up. As we see what's going on, which this is the DXY, which is the US dollar index, is the US dollar versus 6 other currencies. And we see that really, I mean, the US dollar has been on this parabolic uptick since May of last year. So it's been over a year now, where at a certain point it was at 89 on the DXY. Now it's gone up something like in range of 20% really, versus these other currencies like the euro, Canadian dollar, the British pound, and so forth. So and it has not been this high really. I mean, the last time the US dollar was doing this kind of behavior was really at in 2000 during the .com crash. We haven't really seen this. I mean, if you look at the charts, it's so clear that we haven't seen it go this kind of like upwards move and above the 104, and all of a sudden back then it went up all the way up to the 120. So we're kind of really hoping, praying that it does do that again this time as well. But now it looks like really it's kind of a very negative kind of behavior for risk on assets. And how does that play out with the entire stock market? Well, I'm looking at the S&P. The S&P really is very, very negative. I find this is a pretty negative corridor we're seeing now. It looks like we had this bull run, obviously, since June, where the S&P went from 2,700 points all the way up to 4,200, which was a great. I mean, that was percentage-wise. I mean, whoever was trading obviously did very well because the traders basically saw all of a sudden their performance. The S&P going up 20% was excellent for those who had done options or who had done trading, but that's not really what I do, unfortunately. So basically, if I look at this, and now we're at this top part of the corridor, it looks like it's basically also matching with the 50-week moving average. Also, we're currently right now hovering around the 100-week moving average. So I wouldn't be surprised if this thing plays out over the next little while and it starts going a bit downward. So let's track this over the next couple of weeks, see how this behaves. And of course, the Nasdaq, which follows quite a bit the S&P's behavior, is kind of doing the exact same thing. And if we see the coefficient correlation between that Nasdaq and the S&P is at 0.96, so Nasdaq really exact same thing as the S&P. It's kind of this corridor, had this bull run, went from June until sometime in August, mid-August. It went up quite a bit. It went from 10,000, 11,000 points all the way up to close to 13,000, and now it looks like we are starting this negative run downward. So let's see again if it does go down here over the next little while. And of course, what the Nasdaq and the S&P do for us with the crypto space is that they really have an impact. As you know, like also if we observe kind of the environment is kind of like not a great environment for risk on assets. We're seeing obviously the DXY being very bullish, which is the US dollar index. We're seeing interest rates, the Fed being kind of a very hawkish, where it increased the Fed funds rate quite a bit. Also, one other thing as well, which I like looking at, is the 10-year treasuries in the US. Again, 10-year treasuries, they're kind of like hovering around 3%. So that is kind of like this kind of staying here. So it's not very a very good environment for risk on assets. And of course, if I look at what Bitcoin is doing right now, Bitcoin really, the way it's behaving is that it's obviously been hanging around. It was below its 20-week SMA and 21-week EMA. It was hovering around this 200-week moving average, which really was it's kind of a very key moving average for Bitcoin. Because if I look at this in the past, really, I mean, I can show it to you on a, I guess this would be good for now, but basically, Bitcoin really doesn't go that often below the 200-week moving average. So we see here, the last time we saw it go down really was right during March 2020 when the pandemic started. It went down. It was kind of a wick and went right back up. Right, it went down again, and it looks like it was trying to recover, but now we're seeing some resistance. So I'm curious to see how this is going to play out over the next little while. As you recall, a couple of videos back, we had looked at what Bitcoin was doing with as far as Rec Capital's, which is a great technical analyst. What he had done was basically looked at the 20-month moving average, and so we're kind of expecting really his analysis was excellent, showing how basically the 20-month moving average was very good in the past in finding Bitcoin's bottoms. So right now, if that past performance of Bitcoin is going to kind of repeat itself this time around as well, then we're going to be anticipating that Bitcoin should be staying around these points, which is something that's in a range of 18,000 to maybe as low as 16,000 to maybe as high as 21,000 over the next little while, right? So until maybe we get the next bull market, which should happen hopefully sooner rather than later. But if I look at this again, Bitcoin is kind of like right now at a certain point went down to 18,000 US dollars, then it went all the way up to something in the range of 22, 23, 24,000 approximately almost. And now it looks like we are basically getting ready right now for potentially staying in this environment, or maybe even potentially go a little lower. So I'm very curious to see how this plays out. And of course, as I look at what's happening with Ethereum versus Bitcoin. This is an excellent indicator when we look at the two, Ethereum versus Bitcoin, which has really been hovering really in this range of 0.05 all the way up to 0.08 really since last May. So it's been in this range, in this corridor for quite some time, even though we had this little wick in June of this year, and it went down below it, but then it kind of recovered right away. Actually, it was more than a week. It kind of stayed there. I kind of stayed in that space for really for over a month. So that this was actually a very interesting time for Ethereum Bitcoin. But it didn't really, back then, it didn't really behave the way it had done in the past, where it had gone all the way down to this 0.02 mark. This time around, it kind of rebounded, and right now it kind of didn't get exactly at this resistance line. It kind of is basically right now, it looks like it's hovering around here. So I'm very curious to see how this is gonna play out. Is this ETH versus Bitcoin in the chart going to be kind of hovering like this and just build more congestion, more consolidation, or is it going to be at a certain point breaking negatively or positively? So I'm not sure that this is going to play out. So let's just pay attention to it. And of course, the way Ethereum is behaving, Ethereum has been very interesting the last little while. So we had this this perfect head and shoulders that it broke, and now it had this bull run, of course, this massive bull run. I mean, it went up almost 50%, and really it hit this resistance line at approximately $2,000 US. Now it looks like it's hovering between the $2,000 to $1,600 mark. So I'm very curious to see if this is going to be a Wyckoff distribution, where it's going to be kind of like hitting this point or this point and then going back downwards again. I'm just very curious to see how this is going to play out. Really, I have no idea how this is going to play out, but in the grand macro environment being kind of negative with what's going on with the liquidity crunch, the interest rates, and also with the stock market in general, obviously this is not a great environment for the crypto space. So to conclude, I'm kind of waiting right now to see how things will play out over the next couple of weeks, couple of months. I'm paying a lot of attention to the interest rates, a lot of attention to what the Fed's going to do, of course, and also what's going to happen with the liquidity crunch, because the liquidity has direct impact to risk on assets, such as the crypto space, such as the Nasdaq, and so forth. So right now, it's not a very not a great environment for long-term investors such as myself. Obviously, the traders who are doing day trading or shorter-term trading, they're seeing a lot of volatility. So it could be good for those guys if they know what they're doing, obviously. But to basically, for me, I'm kind of hoping this thing plays out, hoping interest rates get more stabilized, and hoping that the liquidity crunch kind of gets more stabilized as well, so that it becomes, again, a better environment for our long-term investments for risk on assets. So thank you so much for watching, everyone, and looking forward to your comments and next videos. All the best. Bye-bye.